In this video, I give you a full A to Z guide on how to pass a funded account in 2025. Just imagine trading with 100k, trading with 200k, or even $400,000. I know, it seems pretty crazy. Prop firms allow you to scale your money into hundreds of thousands of dollars for just a small fee. This is how most traders start making real money trading. But here is the catch. Prop firms only make money when you fail. Break the rules, your account is gone. No questions asked. By the end of this guide, you'll know exactly how to pass a funded account and convert your $500 into 200k, making 5 figures a month effortlessly. I am breaking down strategy, risk management, and the best way to pass these fundage. So, with that being said, we'll start with what prop firms are, how to understand these funded accounts, and the rules involved to passing these challenges. Because they are not just going to come through and be like, here's 500k, have fun. So, this is one of the top prop firms, Funded Next. How do challenges and prop firms really work? The way you pass your funded account is either by completing a 2-step challenge, with one being the main one and the second one just a verification for them to ensure you are profitable, or a 1-step challenge. You might say, why the fuck should I do 2 challenges instead of 1? Fuck no, I choose the 1-step. While the 1-step sounds easier, the reality is that it often comes with tighter rules. Lower daily loss limits, no weekend holding, and stricter trading behavior. The 2-step might take longer, but it gives you more breathing room and flexibility. So, for most traders, especially beginners, the 2-step challenges are the smarter play because they offer more room to recover from small mistakes. To pass the challenge, in the first phase, you need to hit 8% profit. In how many days you want, it doesn't matter. So, after you've done that, for the second phase, you need to hit another 5%. And if you do this, you're originally a funded trader. But it's not only this. Most traders fail to understand the most stupid part of the challenge. Maximum daily loss and max overall loss. The max daily loss is how much you can lose on a day, and the max is how much you can lose in how many days you want from the capital they provided you. Most traders fail the challenge because they don't understand how to lose less than the daily max loss amount. Stick around because we'll discuss the problems traders face when they pass a funded and how to overcome them. Last filter is minimum trading days. To pass their challenge for Funded Next, it's 5, but on funded accounts you don't get paid immediately, just like with real live accounts. Instead, you get paid in a set time. For most prop firms it's around 30 days. Here we go! Now it's time to discuss strategy. So, let's start from the strategy fundamentals. We find the 5-wave structure using Elliott wave theory. You might be like, what the fuck is that? So, Elliott wave theory is basically a way to understand how price moves in pattern. And these waves repeat because human psychology never changes. That's what Elliott figured 100 years ago. Here's how it works. Trends move in 5-wave structures. The first wave, the price moves in another direction, the trend begins. Wave 2, a small pullback. People think that the trade is over, but it's not. The wave 3, the most powerful move. Wave 4, a small pullback again. Wave 5, the last push of the trend. And after that, the market reverses and does a 3-wave correction. A, B, and C. So, Elliott wave theory is my main factor of the strategy, but in order for me to enter an A+ setup, I need to have some confluences as well. Change of character. This is straightforward. Change of character happens when price doesn't make a new high and breaks down. For example, here's our strong trend making higher highs. At some point, it loses momentum. It does a consolidation, and it finally breaks that consolidation and goes to hell. The next thing I look for is RSI, specifically if it's overbought or oversold. Now, RSI stands for Relative Strength Index, but don't give a fuck about the name. It's just a momentum tool that tells you if price is moving too fast in one direction. It's a number from 0 to 100. If it's above 70, the market is considered overbought. If it's below 30, the market is considered oversold. Why does that matter? Because when something is oversold and I see a complete Elliott wave structure, that's when I know buyers might step in soon. Same with overbought. If we are finishing wave 5 and RSI is screaming overbought, that's my sign the move is almost there. Now, I base my entries off fair value gaps and a thing called opportunity zone. Fair value gaps are gaps in the market. You can use an indicator for that. Opportunity zones are trend lines. If they align with a fair value gap and the setup meets all the other confluences, this is an A+ setup. To draw an opportunity zone just like I did, you take the trendline tool and you watch for 3 or more contact points. Now, I hope you understood my strategy's fundamentals, but theory alone didn't make anyone rich. So, to combine this all together, let's find a trade. As you can see, we have 1, 2, 3, 4, and 5. Then I wait for a change of character. As you can see, it happened. We enter at the closest middle point of the fair value gap near the opportunity zone. I entered here and I set a tight stop loss. Then I set my take profit and I let the trade run. As you can see, full take profit and even more if I had help. By the way, if you want to find trades effortlessly with just a notification on your phone, contact with like-minded traders, have access to super valuable content including a premium trading course, weekly live calls, and way more, I suggest you join NeoFlow, which is my trading community that I created to help you guys master the game of trading, while saving yourself years of trying to figure it out by yourself. I've been where you are too. We supply you with a premium 4-hour training course, weekly calls, a setup detector that literally finds setups for you and set a notification to your phone so you spend less time watching the charts and enjoy your life, live trading and weekly educational content. And you can get all that for early access for 40% off using the code in the description. But this offer won't be long enough. We only have 10 spots left. After they are sold out, prices will return back to normal. No questions asked. But if you don't have the back for NeoFlow, I got you as well. You can join our free Discord community, which has access to our NeoFlow students as well. You can use them for networking, become friends, or whatever, I don't care. We offer educational content, training strategies, and 24/7 help from our moderators. See you inside, whether NeoFlow or the free Discord. You can both find them in the description. So, what's the most common reason I mentioned traders often fail to pass the challenge? Right, max daily loss. One of the easiest parts in trading, yet optional for some people, is risk management. Most traders risk random amounts or treat it like a casino. Without risk management, you cannot become profitable even in 100 years from now, because it's more important than the strategy itself. So, let's stop pretending it's optional and treat it with respect. Let's say you are trading a 100k challenge account. Most prop firms give you a 5k max. That means if your drawdowns exceed that in a single day, you are done. But here is the real problem. Traders treat that 5k as a target and not as a limit. This mindset is completely wrong. A good approach is to risk 0.5 to 1% per trade. That's $500 to 1k. And you don't need to take 10 trades a day. 2 or 3 well-managed trades are way more than enough, even on a bad day. If you take 3 losing trades at 1% risk, you are only down 3%. You can trade again tomorrow. Now, imagine doing the opposite, risking 5% on a single trade. You lose 2 in a row. You are out of the game, even if you have passed the challenge. It's not worth it. There's a unique kind of pressure that comes with being almost funded. That final stretch of a challenge or evaluation where the payout feels close enough to touch it, but still requires discipline to secure. Many traders don't talk about this. But these states can be more mentally taxing than the start. It's not about executing trades anymore. It's about managing patience, fatigue, battling boredom, and resisting FOMO. Patience is real. You've been following your plan, trading with discipline, and now you're a few percentage points away from that target. But instead of feeling confident, many traders start forcing trades, trying to speed up the process. It's as if the closer you get, the more desperate you become to be done, and that's exactly when mistakes creep in. Then comes boredom. The market might not be giving you setups. Now every quiet day feels like a lost opportunity. While you are in this limbo, not taking trades feels harder than losing. But the truth is, not trading is sometimes the best trade. Boredom is a sign to step back, not push forward blindly. And of course, there's FOMO. Watching others pass their evaluation on Instagram, seeing posts about payouts, and feeling like you are the one left behind. You start to question your system. Does this thing work? Your pace, even your own abilities. The fear of missing out can trick you into abandoning what's working because you just want to get there faster. To deal with these mental games, here are a few mindset hacks. Journal daily. Write how you are feeling, especially the frustration and the impatience. Seeing your thoughts on paper gives you distance from them and lets you respond with clarity. Take intentional breaks, a walk, a day off, even an hour disconnected from the charts. These resets can help you gain control. They remind you that funding is not a race and that it's just a test of patience. Visualize the payout. Spend a few minutes each morning visualizing yourself funded. How will it feel? The email, the dashboard, and the funded account. Not just the moment you are funded, but how you trade once you are. This keeps your mind focused on the long term instead of short-term emotions. Being almost funded is a test of psychology more than strategy. The finish line is close, but only if you keep showing up like the disciplined version of yourself that got you there. Don't let impatience steal what consistently you've earned. Your job is to preserve your capital. Here's what most failing traders do. Of course, they will revenge trade after one loss. They double down after a bad setup. They ignore the confluences just to feel active. They skip journaling. They trade during emotional days after a breakup, a fight, or even when sick. All of these habits can add up to one thing: inconsistency. You are not in the market to prove anything. You are here to execute a plan. If your trades aren't planned, you are just gambling. When people think of trading, they imagine making 10k in a day. But your real job as a trader is to protect capital, wait for high probability setups, and stay in the game long enough to let probabilities play out. That's how you become consistently profitable. Most people lose challenges because their strategy doesn't work, or because they overtrade, chase losses, increase risk after a loss, or don't have a system in the first place. All ego, and ego has no place in trading. Ask yourself, what do professional traders do differently? They respect risk, they follow rules, they are selective. They do not panic at all. They don't over leverage. And they definitely don't go all in on one trade hoping it passes the challenge. Because, let me tell you something, let's say it works out and you pass the challenge on luck, but what happens next is that you can lose it too. The prop firms are not stupid. There are instant funded accounts now. You can get them instantly, but you can lose them as easily as you got them. Risk management equals emotional control. If you over risk, you become emotional. Once emotion takes over, your decision making is compromised. You start moving stop losses, adding to losing trades, or taking random trades. That's how most traders fail early and quit. And the worst part, after a big loss, most people don't slow down. They speed up. They try to make it back. And that's how challenges get blown in one day. Not because the strategy is bad, but because the risk was never controlled. You need to just build a system and stick to it, no matter what. Here's how. Decide your risk per trade. Set a max daily loss limit. That's well below your firm's limit. Most prop firms go to 5 to 6%, so 1% could be too risky, so try 0.5% instead. Decide your max trades per day, 1 to 3. If you hit your limit, you stop. Period. If you are not feeling it that day, it's okay, king. Don't trade. Maybe go shopping or do something else. I don't care what you do. Trading is a boring job. No serious trader enjoys trading. But that's how that works. Real trading is controlled, repetitive, and almost robotic. That's the price of consistency. Let me tell you how I learned this the hard way. When I first started trading, young me, 3 years ago, was blowing account after account. And of course, I was wondering why the fuck does this happen to me? I was one step away from quitting. Then did I realize that my risk management was completely fucked. I risked different amounts on every single trade and was trading my strategy emotionally. I did not follow my rules. I was over trading, over leveraging, and all that good stuff. Even though I was trading emotionally, once I started risk management and started risking like a robot, literally like a robot, same amount, same amount, same amount, same amount, same amount, I started being more consistent to my strategy. I started following the rules better and traded less, while picking the good setups. This is the power of building a proper risk management foundation. You don't need to be perfect. No one is born perfect. No one is born perfect without trying to develop a skill. You just need to be consistent because not only risk management is more important than the strategy, but you can be like me 3 fucking years ago who was trading emotionally and make yourself consistent. If you be consistent, I guarantee you, no matter what happens, at some point you'll make it in trading. Here's what you've been waiting for. How to really pass these challenges effortlessly. Actually, it's very simple. Not easy, but fucking simple. Most traders fail because they are chasing the challenge like it's a race. They think that they have to pass the city in 3 days. They want to turn 100k into 500k overnight. But the harsh truth is, the fastest way to pass a funded account is by literally slowing down. Let me explain. Step 1 is stop over trading. Passing a challenge is not about taking 10 trades a day. In fact, the less you trade, the higher your chances of passing. Because if you have more than enough exposure to the market, you'll make more mistakes, meaning less profit for more work. Who the fuck wants that? Here's what I tell people. You need 1 or 2 A+ trades per week. That's it. Think about it. Let's say you risk 1% per trade. 2 solid trades, you're already up 2%. Do that for 4 weeks, you are up 8%. Most people blow their challenge because they want to flip it in a week. But if you treat it like a long game, the numbers are actually in your favor. Step 2 is pick only the A+ setups. Now that you are not over trading, you need to be hyper selective. If your setup isn't clear, you don't trade. If market structure doesn't make sense, you don't trade. If you are trading because you are bored, you definitely don't trade. Most funded accounts are lost in low quality trades, or the trader didn't wait, or they forced it. They weren't following their plan, or worse, they didn't even have a plan. Step 3. Treat the challenge like a real account. And literally, I fucking mean it. Because think about it. If you passed by over leveraging or getting lucky, how will you perform when you are funded? You'll blow it in a week. That's why I always say, pass it the same way you want to trade when you are funded. If you don't build consistency now, it's not going to magically show up later. Step 4 is to understand timing and sessions. Another key, only trade during the best time. For most people, that's New York Open, London Open, the first 1 to 2 hours I trade personally. That's when volume comes in. setups play out clean. Outside of that, it's usually choppy, undecisive, or manipulated price action. So why would you risk your hard-earned capital during the worst part of the day? Funded traders don't trade more, they trade better. Let me tell you something. Do you want to trade 12 hours and make less profit than if you have traded 2 hours for significantly more? Probably no. So stop believing that more trades equal more profit, because it's simply not true. Step 5. One of the most underrated habits, journaling, which deserves a 20-minute long video talking about the benefits of it. Literally, outside of trading, I do journaling every day at 6:30 a.m. after I've read my book. Every trade you take during your challenge, write it down. Entry, exit, reason, what you saw, what you felt. After a week, patterns will show up. You'll see what works and what's costing you. Most traders never track. They take trades blindly and wonder why nothing changes. But funded traders treat this like a business. Every decision is documented. Every mistake becomes a lesson. And that gives you an edge. A real edge. Because now you are growing in every single trading session. Honestly, journaling is the thing that changed my life. Once I started, every trade was the lesson for me. I was getting 1% better every single day from each trading session, including no trade days. It forced me to slow down and really analyze the reason I entered, how good the setup was, had I followed my rules, and if my mindset and emotional state was good. At first, I couldn't stand it. It made me face my own bullshit. The revenge trades, the FOMO, the overconfidence after a win, but over time it built discipline. Without journaling, I'd still be stuck in that cycle of taking trades I knew I shouldn't. It became my edge, not just technically, but emotionally. That's the part most traders miss. Your journal isn't just notes, it's a mirror, and sometimes that's exactly what you need. Passing a funded challenge isn't about being a genius. It's not about having a magic indicator. It's about having risk management that protects you, waiting for only high quality setups, treating it like a real fucking account, trading during peak hours, and journaling everything. That's it! Do that, and not only you'll pass the challenge, you'll stay funded and be consistent. And eventually, you'll realize this game is much more about discipline and mindset than anything else. Now, go and pass that fucking challenge the right way. As now you know, the fundamentals of funded accounts, my proven trading strategy, risk management, and the exact process to pass the challenge. But becoming a funded trader isn't easy, and if you are a beginner, this video alone won't be enough. You need to understand what I am about to show you in the next one. Don't forget to like and subscribe if you are serious about trading and investing, and I will see you there.